There's a moment in trading that feels like you finally escaped the cage. It's the moment you make real money. Not a cute little green day you can explain away as luck, not a tiny profit that still leaves you feeling broke, but a number that hits your account and makes you sit back like, oh, this is real. For a lot of traders, that number is $20,000. It's big enough to feel like proof. It's big enough to change your mood. It's big enough to make you walk different for a day. It's big enough to make you feel like you finally crossed into the world, where trading is not just a hobby or a dream, but an actual weapon. And that's exactly why it becomes dangerous. Because most traders think the real problem is getting to that number. They think the hard part is surviving long enough, learning enough, and finally catching the moves that create a big payout. They think once they hit it, the pressure disappears. They think once they hit it, they become that disciplined, consistent, professional trader automatically. They think the money changes them in a good way. But the truth is, the money doesn't change you into a pro. The money exposes you. That's why the real problem isn't making 20,000. It's what happens after. It's what you do when you finally get what you've been chasing. It's what your mind does when it realizes the market can actually give you that kind of money. It's what your ego does when it starts believing you're special. It's what your emotions do when they realize the scoreboard can move fast. It's what your discipline does when your brain starts bargaining with your rules because now you earned the right to push. If you've ever had your biggest win and then somehow went into a weird emotional spiral after, like the video because you're not alone. Subscribe if you want to learn how to actually keep the money you make in this game, because making money is not the finish line. Keeping it is the real skill. Share this with a trader who keeps saying they're one big day away, because I promise you, one big day doesn't save you if your mindset is still the same. Now let's talk about why 20,000 matters psychologically. I'm not saying 20,000 is some magical number. I'm saying it's a mental switch. It's the point where a lot of traders stop thinking in theory and start thinking in reality. Before that, trading is mostly imagination. You imagine what it would feel like to win big. You imagine what it would do for your life. You imagine how calm you'd be, how confident you'd be, how consistent you'd be if you just had some money in the account. Your dreams live in that imagined future. 20,000 turns imagination into evidence. It's the first time the market feels like it can actually fund your life. The first time you start thinking about withdrawals. The first time you start thinking about scaling. The first time you start thinking about telling people. The first time you start thinking, maybe I don't need my job forever. And that is exactly where the mind gets unstable. Because the mind hates slow progress when it finally tastes speed. The mind gets addicted to the feeling of fast results. It starts wanting that feeling again. It starts chasing the high, not the process. So the trader who was careful and patient on the way up can become reckless right after the win. The trader who was disciplined because they were scared of blowing up now starts breaking rules because they feel invincible. The trader who was humble because they were struggling now starts acting like the market owes them. The trader who used to respect risk now starts treating risk like an inconvenience. That's why the number matters. It's a turning point. Everybody posts the win. Nobody posts what happens after. There was a time when I hit a number that felt like a breakthrough. It wasn't 20,000 in one day for me, but it was a level that made me feel like, okay, I'm officially in this. I felt sharp. I felt validated. I felt like I proved myself. And immediately my brain started doing something I didn't notice at first. It started trying to repeat the moment. It started thinking about how to get another big day. It started looking at the market as a slot machine I could pull harder now that I saw it pay out. So the next session, instead of trading my normal plan with patience, I started hunting. I started looking for opportunities aggressively. I started wanting action. I started wanting to capitalize. The market didn't even change. I changed. I started pressing trades. I started taking setups that weren't my best setups. I started sizing a little bigger because I felt like I earned it. And when the market didn't hand me another big win, I got irritated. That irritation turned into forcing. That forcing turned into losses. And those losses didn't just cost money, they cost emotional stability. They made me feel like the big win was fake. They made me feel like I couldn't trust myself. They made me feel like I was about to fall back into the same old cycle. That's the part nobody tells you. After a big win, the mind becomes unstable in two different directions. It can become too confident, or it can become terrified of losing what it just gained. Both directions are dangerous. One direction creates greed and ego. The other direction creates fear and paralysis. Either way, your execution gets worse. There's a trader named Chris. Chris has been trading for 2 years. Chris has struggled. Chris has had small wins and big losses. Chris has been inconsistent. Chris has been chasing. Chris has been trying to figure out the market. Then one week, Chris hits a hot streak. A few solid trades, a nice run, and he makes 20,000. He's on top of the world. He's telling himself he finally cracked the code. Chris posts the screenshot. People hype him up. His confidence explodes. He starts feeling like a different person. He starts buying things. He starts talking different. He starts planning his future around that win. Now the next week comes. The market is slower. His setup isn't as clean. He takes a few losses. He gets angry. He starts trying to force the same feeling again. He sizes up because he thinks he has to make it back. He starts chasing. He starts revenge trading. And within a short period, he gives back a big portion of that 20,000. Now his emotions are destroyed. He feels shame. He feels like he embarrassed himself. He feels like he can't trust his own ability. Chris learns a painful lesson. Making money doesn't make you consistent. It reveals if you were consistent already. If your discipline is real, a big win won't change you. You'll treat it as a normal outcome of probability. You'll log it, respect it, and continue following the process. If your discipline is emotional, the big win will break you. You'll either get arrogant or fearful, and both will destroy you. The enemy is not the market. The enemy is what your mind does when it starts believing the story. The story is, I made 20,000, so I'm now a different trader. I can relax now. I can take bigger risks now. I have to keep performing at this level. I made 20,000, so now I can't go back. That last one is the most dangerous. Because once you believe you can't go back, you start trading with pressure. Pressure destroys clarity. Pressure destroys patience. Pressure makes you chase certainty. Pressure makes you overtrade. Pressure makes you manage trades emotionally. So the big win becomes a prison if you don't handle it right. Instead of freedom, it becomes pressure. That's why I'm telling you the real problem isn't making 20,000. The real problem is what happens after. Now, if you're watching this and you haven't made 20,000 yet, don't think this video doesn't apply to you. It applies even more. Because what you do before the win determines what happens after the win. If your entire mindset is, I need one big day, you're building the exact psychology that will destroy you once you get it. You're training yourself to be outcome addicted. You're training yourself to chase. You're training yourself to be emotional. So you want to build the mindset now that can hold money later. This is the truth. You can't scale a broken mindset. You can't scale emotional trading. You can't scale inconsistency. When you add more money to a broken process, you don't become more profitable. You become more destructive. Now let's talk about the main reason 20,000 changes everything. It changes your perception of risk. Before you make that kind of money, risk feels scary because you don't have proof. You're careful because you're not sure. After you make that kind of money, risk feels smaller because you feel like you can always make it back. You start thinking, if I did it once, I can do it again. That thought can be empowering, but it can also be reckless. It's empowering when it makes you calm. It's reckless when it makes you sloppy. So the question becomes, how do you keep it from making you sloppy? How do you stop the big win from turning into ego and greed? How do you stop it from creating pressure and fear? How do you protect the money and protect your mindset at the same time? That's what this whole video is about. If this is hitting comment, I want to keep it, because that's the mindset shift. Not I want to make it. I want to keep it. Like the video because it means you're serious about building a trading career, not just having a trading moment. Subscribe because on this channel, we're not chasing screenshots, we're building consistency. Share this with someone who keeps getting big wins, then giving them back, because that cycle ruins lives. Chapter 2. After you hit 20,000, your brain starts acting like the market is different. That's the first trap. The chart is still the chart. Price still moves the same. Liquidity still matters. Structure still matters. Risk still matters. But your brain doesn't experience it that way anymore. Your brain experiences the market as a place that just gave you proof. Proof is powerful. Proof makes you feel like you're no longer guessing. Proof makes you feel like you're no longer hoping. Proof makes you feel like you're no longer dreaming. Proof makes you feel like you've entered a new chapter of your life. and that emotional shift changes the way you trade. Most traders don't understand that every big win changes your relationship with the market. Before the win, you're trying to survive. You're cautious because you don't fully trust yourself yet. You're cautious because you've been hurt. You're cautious because you don't want to lose more money. You're cautious because you don't want to feel embarrassed again. There's fear, but there's also humility. You're trying to protect your capital. You're trying to execute the plan. After the win, humility starts dying. Not completely, but enough to make you dangerous. You start thinking you're better than you were. You start thinking your instincts are sharper. You start thinking you can read the market. You start believing in yourself harder. That sounds good, but it also introduces ego. Ego is not confidence. Ego is emotional attachment to being right. Ego is the belief that you have something to prove. Ego is the belief that your skill is higher than it actually is in that moment. That's why after 20,000, the same trader who used to wait becomes impatient. The same trader who used to respect rules starts bending them. The same trader who used to take only A setups starts taking A minus setups. The same trader who used to stop after a goal starts pushing for more. The same trader who used to manage risk carefully starts believing risk is optional. A big win creates dopamine. It creates that feeling of achievement. It creates that rush. It creates that I did it moment. And dopamine is not just happiness. Dopamine is motivation. Dopamine tells you, repeat this. Dopamine tells you, chase this again. Dopamine tells you, find another hit. So after a big win, you don't just want money. You want that feeling again. You want the rush again. You want the validation again. You want the identity again. You want to feel like the guy who can do this. And because trading gives you real-time feedback, your brain gets trapped in the idea that you can recreate that high quickly. That's why traders who hit big numbers often fall into a pattern of forcing. It's not always conscious. They don't sit down and say, I'm about to overtrade. They sit down and feel hungry. They feel like there's more available. They feel like they're in a new level. They feel like they can scale. That hunger becomes impatience, and impatience kills precision. Precision is what created the big win. So the big win becomes the reason you stop doing the thing that caused it. This is one of the most common tragedies in trading. The market rewards a trader for being disciplined, and then that reward causes the trader to stop being disciplined. The moment you hit a big number, your mind starts telling stories about the future. You start thinking about buying things. You start thinking about telling people. You start thinking about how you could change your life quickly if you just repeat this. You start imagining consistency at a higher level. And the problem is, imagination creates pressure. Because once you imagine a new lifestyle, you start feeling like you have to protect it. So your big win creates two competing forces inside you. One force is greed. Greed says, go get more, push harder, scale up, repeat this. The other force is fear. Fear says, don't lose this, protect it, be careful, don't mess this up. Those two forces create emotional instability, and emotional instability is deadly in trading. Sometimes greed wins and you take too many trades. Sometimes fear wins and you hesitate and miss good opportunities. Sometimes both happen in the same week. You overtrade one day, then freeze the next day because you're scared of losing what you made. That inconsistency is what destroys momentum. This is why traders often feel like they lose it right after they hit it. It's not because their edge disappeared, it's because their emotional state changed. There's a trader named Jay. Jay has been grinding. Jay has been struggling. Jay finally gets a big run and hits 20,000 profit in a short period. Jay feels like he's finally arrived. Jay starts thinking, I'm not regular anymore. Jay starts thinking, I'm about to go crazy in this. Jay starts thinking about scaling. Jay wakes up the next day and feels like he has to keep performing. He doesn't even realize it, but now the market feels different. It feels like a test. It feels like he has to prove something. It feels like every trade matters more. Jay starts trading like he's being watched. He starts checking P&L more. He starts caring about the outcome more. His decision-making gets tighter, less fluid. He hesitates on good trades. Then he gets frustrated and forces bad trades. Then he takes a loss. Then he takes another. Now the 20,000 is being eaten. Now Jay starts panicking because Jay's identity is attached to that win. Jay doesn't want to be the trader who lost it. Jay doesn't want to be the guy who had one lucky run. Jay doesn't want to go back to the old version of himself. So Jay starts trading emotionally, Jay starts chasing, Jay starts trying to get back to the high, Jay starts treating the market like it owes him the same run again. That's how Jay gives it back. Not because Jay became stupid, but because Jay became emotional. The biggest mistake traders make after hitting 20,000 is they start changing things. They start switching their process. They start increasing size too early. They start trading different pairs. They start trading different sessions. They start trying to maximize their new level. They start thinking, now that I have proof, I should expand. That expansion is usually ego. It's not strategic growth. It's emotional expansion. It's the feeling of being unstoppable. The professional mindset is different. The professional mindset says, I just hit a big win, so now my job is to protect my mental state and stay exactly the same. The professional mindset says, let me keep executing the same way. Let me keep risk controlled. Let me keep my schedule fixed. Let me keep my setups narrow. Let me keep my rules strict. Because the pro knows the win is not the proof of mastery, it's the reward for discipline. The pro knows discipline is fragile after a big win. So they tighten up, not loosen up. Most retail traders do the opposite. They loosen up. They start thinking they earned freedom. They start thinking rules are optional. They start thinking they can freestyle. This is where traders become dangerous because confidence without structure is chaos. Confidence without discipline becomes arrogance. Arrogance becomes overtrading. Overtrading becomes losses. Losses create emotional panic. Emotional panic creates revenge. Revenge destroys the account. That is the after problem. Now let's talk about why 20,000 also changes your relationship with money. Before you make that kind of money, you fear losing because you don't have much. After you make that kind of money, money can start feeling less real. It can start feeling like numbers. It can start feeling like points. You can become desensitized. That desensitization is extremely dangerous. It makes you risk more casually. It makes you take bigger losses without feeling it immediately. It makes you careless. This is why some traders blow up right after their first big win. They become desensitized and reckless at the same time. If 20,000 changed your emotions, it means your emotions were never under control. If 20,000 changed your discipline, it means your discipline was never real. Real discipline is not dependent on results. Real discipline is who you are in every market condition. Real discipline is what you do when you're up, what you do when you're down, what you do when you're excited, what you do when you're bored, what you do when you're frustrated. So hitting 20,000 is a test. It's not just a reward, it tests your identity. It asks, are you still the same disciplined person, or are you now a greedy person? Can you stop when you're up, or do you need more? Can you accept that success still requires patience? Can you keep your mind stable? This is why the real problem isn't making the money. The real problem is becoming the person who can hold it. Chapter 3. After you make 20,000, the market doesn't change. Your eyes change. That's the first thing you have to understand, because if you don't, you'll spend months blaming the chart when the chart is innocent. The candle doesn't know you just had a big win. The liquidity doesn't care. The session doesn't change. The algorithm isn't sitting there like, oh, he just hit 20,000. Let me mess with him. None of that is real. What's real is your perception, and perception is everything in trading. When your perception changes, your interpretation changes. When your interpretation changes, your decisions change. And when your decisions change, your results change. So the after phase isn't mysterious. It's predictable. It's human psychology reacting to a new reality. This is why you can take the exact same trader with the exact same strategy and the same market environment and still get different performance right after a big win. Because it's not about the setup. It's about the state. Most traders don't realize they're trading their state more than they're trading the chart. The most common behavioral shift that happens after 20,000 is the seed of almost every give-back story. It's what I call expansion mode. Expansion mode is when you start believing your edge is bigger than it is. You start believing you can trade more pairs, more sessions, more setups, more time frames, more entries. You start believing the market is wide open. You start believing you have unlocked something, like you found the cheat code. So instead of staying narrow and surgical, you widen. This widening is usually the first mistake. Before the big win, you were locked in. You were selective, you were patient, you were careful, you were waiting for your best opportunities. After the big win, you start seeing opportunity everywhere. You start feeling like every movement is tradable. You start scanning charts like a hungry man walking through a buffet. That hunger is not skill. That hunger is dopamine. Dopamine makes you chase. Dopamine makes you expand. Dopamine makes you impatient. And impatience destroys edge. I want to paint you a picture of how this looks in real life. You wake up after a big win. You feel good. You feel energized. You feel like you're on a new level. You sit down, and instead of calmly waiting for your setup, you start hunting. You start checking multiple pairs. You start looking for what's moving. You start wanting action. You start wanting to catch another run. So even if your main setup isn't present, you start forcing trades because you feel like you're supposed to be making money now. That feeling is pressure disguised as confidence. And pressure always makes you worse. This is why traders who hit a big win suddenly start trading all day. They go from being patient to being addicted. They go from being process-based to being outcome-based. They don't even realize it's happening because it feels like ambition. It feels like hunger. It feels like I'm locked in. But if your hunger causes you to break your rules, it is not hunger. It is greed. The second behavioral shift that happens after 20,000 is what I call performance addiction. Performance addiction is when you start expecting the market to perform for you every day. Before the win, you were grateful for green days. After the win, you start expecting them. Before the win, you were patient with slow days. After the win, slow days feel insulting. Before the win, you accepted that not every day is tradable. After the win, you start thinking every day should pay you. That expectation is entitlement. Entitlement is poison. Entitlement is what makes traders get emotionally when the market doesn't give them what they want. Entitlement turns the market into a personal relationship. You start feeling like the market is doing something to you. You start feeling like you're being disrespected. You start feeling like you deserve wins because you proved yourself. That is not trading. That is ego, and ego is always expensive. Now I want you to see how ego shows up subtly because most traders don't think they're arrogant. They think arrogance looks like somebody flexing, somebody posting wins and talking crazy. But ego can exist quietly inside you. Ego can exist as the belief that you should be able to win every day now. Ego can exist as the belief that you are above losses now. Ego can exist as the belief that you shouldn't have to struggle anymore. Ego can exist as the belief that you should be able to predict the market with more accuracy now. Those beliefs create a psychological trap because the market will still give losses. The market will still have choppy days. The market will still have slow sessions. And when you experience those realities while holding an ego expectation, you become unstable. So what happens next? The trader takes a loss, and instead of accepting it, they feel insulted. They feel like they're above that. They feel like it shouldn't be happening. They try to correct it immediately. That correction becomes revenge. Revenge becomes overtrading. Overtrading becomes more losses. Now, the trader is in emotional collapse. The give-back phase begins. The third behavioral shift is the most quiet and most destructive. It's fear of losing status. After you make 20,000, you start seeing yourself as a different trader. You start identifying as a winner. You start identifying as a trader who can make big money. That identity feels good. That identity feels like power. But now you are afraid of losing that identity. So your behavior changes. You become more attached to being right. You become more attached to winning. You become more reactive. You check your P&L more. You care more. You start trading like you have something to protect. This is why big wins can create fear, not just greed. Fear of losing what you gained. Fear of going back. Fear of being exposed. Fear of being called lucky. Fear of becoming the trader who couldn't keep it. That fear creates pressure. Pressure creates hesitation. Pressure creates micromanagement. Pressure creates self-sabotage, so you can literally become worse after success because success raised your internal stakes. You think you're at a higher level, so you feel like you can't afford mistakes. That's why the emotional cost of losses becomes heavier. A 1% loss used to feel normal. Now it feels like it threatens your identity. This is the part nobody talks about, but it's real. When you grow, the fear grows with you if your identity is attached to outcomes. There's a moment where you make money that you've never seen before. You look at your account and you think, this is what I've been chasing. You start feeling like you finally crossed a line, but then you realize something scary. The same way you made it, you can lose it. And once you become aware of that, you can become hyper-vigilant. You can start staring at your account more. You can start being afraid of every pullback. You can start being afraid of every loss. You can start closing trades early. You can start tightening stops. You can start missing opportunities because you don't want to risk giving back. So now you're winning less. Your profits shrink. You get frustrated. Then greed kicks in. Now you try to force profits. Now you overtrade. Now you swing between fear and greed like a pendulum. That pendulum is what destroys your progress. Most traders are not losing because their strategy is trash. They're losing because their emotional state is unstable. Their emotional state keeps shifting between fear and greed, between caution and aggression, between paralysis and impulsiveness. And after success, that pendulum swings harder. There's a trader named Omar. Omar makes 20,000. Omar gets excited and starts thinking he's finally free. Omar starts trading more. Omar starts increasing size. Omar starts taking more setups. Omar starts believing he can't lose. Omar takes a few losses. Omar feels insulted. Omar tries to get it back quickly. Omar revenge trades. Omar gives back 10,000. Now Omar's entire emotional world collapses. Omar starts thinking he's a failure. Omar starts thinking he doesn't deserve success. Omar starts trading scared. Omar hesitates. Omar misses entries. Omar closes early. Omar becomes a shadow of the trader who made the 20,000. Omar eventually gives back most of it. This is the full cycle. Success creates excitement. Excitement creates expansion. Expansion creates sloppiness. Sloppiness creates losses. Losses create pressure. Pressure creates emotional trading. Emotional trading creates collapse. Now here's the most important question. How do you avoid this? The answer is simple, but it requires maturity. After a big win, you do not expand, you contract. You tighten rules, you reduce frequency, you protect your mental state, you become boring. You become more disciplined, not less. Because after success, your emotions are more dangerous than the market. So your job after 20,000 is not to make another 20,000. Your job is to stabilize. Your job is to keep the state that made the first 20,000 possible. Traders who give it back view 20,000 as a new lifestyle. Traders who keep it view 20,000 as a test of discipline. If you view it as lifestyle, you become emotionally dependent on it. You start spending it mentally, you start planning around it, you start needing it. If you view it as a test, you become cautious in a healthy way. You treat it as proof you can win, but also as proof you must stay humble. This humility is not weakness. This humility is survival. Humility protects you from ego. It protects you from entitlement. It protects you from pressure. It keeps you sharp. Now, if this chapter is hitting you, like the video, because this is the truth that most traders learn the hard way. Subscribe because Traders Mind TV is about building the trader who can keep money, not just make it. Share this with someone who keeps hitting new highs, then crashing, because this cycle is extremely common. Chapter 4. The biggest thing that changes after 20,000 isn't your account, it's your identity. Your identity is the most underrated part of trading because most traders think this is a chart game. They think it's a strategy game. They think it's a technical game. And yes, trading has technical skill, but the technical skill is not what makes or breaks you once you start winning. Once you start winning, the game becomes psychological. It becomes personal. It becomes identity-based. It becomes about whether you can handle being a winner without turning into a self-sabotaging mess. Because when you make money you never made before, your brain starts rewriting the story of who you are. Before 20,000, you might have seen yourself as a student, a struggler, a grinder, a trader who is still trying. You might have seen yourself as the underdog. You might have seen yourself as somebody fighting to figure it out. That identity has pressure, but it also has humility. When you're the underdog, you don't feel like you have something to protect. You feel like you have something to gain. That's why a lot of traders perform better when they have less. They are hungry, but they are humble. They are serious, but they are careful. They are willing to take risk, but they still respect the consequences. After 20,000, your brain starts seeing you as different. Not in a quiet way either. It starts seeing you as capable. It starts seeing you as special. It starts seeing you as someone who can win big. It starts seeing you as someone who can actually do this for real. And that identity upgrade sounds positive, but it creates a new danger. The moment your identity upgrades, your fear of losing that identity is born. This is why success creates new fear. Success creates a new standard, and a new standard creates pressure. Pressure is what destabilizes you. So after 20,000, you're not just trading the market. You're trading your new self-image. You're trading the desire to remain a winner. The fear of going back to being a struggler. The fear of being exposed as lucky. The fear of losing what you finally got. That is why everything changes. Most traders don't fail after success because they become lazy. They fail because they become emotionally attached. They start caring too much. They start watching PNL too much. They start believing every trade is supposed to go their way because they're now that guy. They start believing they have to keep proving themselves because people might be watching. Even if no one is actually watching, you feel like someone is, and that imagined audience is enough to ruin you. You start trading like you're performing, like you have to produce, like you have to protect a reputation, like every day has to be impressive. That performance mindset kills consistency. Consistency comes from calm repetition, not from emotional performance. The second major problem that hits traders is when you make a big amount of money, your brain experiences it like a reward. And rewards create learning. Your brain learns, this is good, do it again. But the brain doesn't learn the details. It doesn't learn the process, it learns the feeling. This is where traders get trapped. They chase the feeling instead of repeating the behavior that created the feeling. They chase the high instead of repeating the discipline, the excitement instead of repeating patience, the big wins instead of repeating good setups. That's why after 20,000, traders become impatient. They want another big day. They want another massive win. They want to feel that rush again. And if the market isn't giving it immediately, they force it. They overtrade, they size up, they expand, they gamble. So 20,000 becomes their addiction. And addictions always demand more. That's the part nobody wants to say out loud. Some traders become addicted to trading the same way people become addicted to gambling. Not because they're stupid, but because the brain is wired to seek dopamine. A big win floods dopamine. It makes you feel alive. It makes you feel powerful. It makes you feel chosen. It makes you feel like the universe just validated you. So you want it again. That desire is subtle at first. It feels like hunger. It feels like ambition. It feels like motivation. But ambition without discipline becomes addiction. And addiction always destroys structure. After a big win, you wake up the next day with energy. But it's not calm energy. It's restless energy. You feel like something has to happen. You feel like you should be able to do it again. You sit down at the chart and you're not waiting anymore. You're hunting. You're scanning. You're pushing. You're trying to recreate. That is addiction. And when you're addicted, you don't respect quality. You respect speed. So you start taking more trades. You start trading lower quality setups. Lowering your standards. Trying to catch every move. You start trading movement instead of structure. That's the beginning of the give back phase. There's a trader named Serena. Serena makes 20,000. Serena posts it. People congratulate her. Her confidence skyrockets. She starts seeing herself as elite. Serena starts thinking she's finally separated from the majority. Serena wakes up and now she wants to live up to this new elite identity. She feels like she has to keep winning. She feels like she has to keep proving. She feels like she has to keep producing results. So Serena becomes obsessive. Serena checks the charts more, trades more, thinks more. Serena reacts more. Serena becomes less calm, becomes less patient. She starts seeing patterns everywhere, starts taking trades that she would have ignored before. Serena starts making the market happen, and then Serena loses. At first it's small, a loss or two, but because Serena's identity is now tied to being elite, the losses feel personal. The losses feel embarrassing. Serena feels like she's about to lose her new identity. So she pushes harder. She tries to fix it. She tries to get back to the high. She starts revenge trading. Now Serena gives back 10,000. She panics, becomes fearful, hesitates, becomes unstable. She gives back almost all of it. Then Serena disappears. That happens all the time. People think the market broke Serena. It didn't. Serena's identity broke Serena. Now, here's the part that separates the trader who keeps the 20,000 from the trader who gives it back. The trader who keeps it does not let their identity depend on the win. The trader who keeps it does not celebrate emotionally the same way. The trader who keeps it does not make the win mean too much. They treat the win as a normal outcome of probability, like evidence, not like a crown, like progress, not like perfection. And that mindset protects them, because the moment your identity becomes, I'm a big winner now, your ego takes over. Your ego starts demanding more. Your ego starts demanding performance. Your ego starts demanding status. That ego becomes a burden. You will start trading to protect the ego instead of trading to follow the plan. That is the moment you lose your edge. So the identity shift you need after 20,000 is not, I'm elite now. It's, I'm disciplined now. I'm consistent now. I'm a process trader now. Because process identity is stable. Outcome identity is unstable. If you make 20,000, you have to learn how to emotionally handle success. Most traders spend years learning how to emotionally handle losses. They learn how to survive red days. They learn how to not blow up. They learn how to control revenge trading. But they never learn how to handle green days. They never learn how to handle big wins. They never learn how to handle success. That's why success becomes their downfall. So what does handling success look like? Handling success looks like tightening your routine right after you win big. It looks like reducing frequency right after you win big. Like journaling more right after you win big. Like taking a break to stabilize right after you win big. Like not increasing size immediately, like acting normal. Acting normal is the most powerful skill after a big win, because acting normal keeps your nervous system calm. It prevents ego inflation. It prevents addiction. Acting normal preserves discipline. Chapter 5. Now we're going to finish this the right way, because the goal of this video is not to make you feel motivated. The goal of this video is to make you dangerous. Not reckless dangerous, but disciplined dangerous. The kind of trader who can hit 20,000 and not self-destruct. The kind of trader who can win big and still act normal. The kind of trader who can finally touch the level they've been chasing and actually stay there. Because the truth is, hitting 20,000 is not rare. What's rare is keeping it. Most traders can get hot for a week. Most traders can catch a run. Most traders can have a moment where everything lines up, but only a small percentage can stay stable after the moment. Only a small percentage can turn a big win into a long-term identity shift instead of a temporary high. So in this final chapter, I'm going to give you the real blueprint of what to do after 20,000. The mindset shift, the structure, and the routine that keeps you from giving it back. Because once you understand this, you stop thinking like a screenshot trader. You start thinking like a career trader. The first thing you need to understand is that 20,000 is not money. It's energy. It is a psychological event. It changes your nervous system. It changes your confidence. It changes your expectations. It changes your identity. So after you hit it, your first job is not to make more. Your first job is to stabilize your state. If you don't stabilize your state, you will trade emotional. If you trade emotional, you will give it back. So stabilization is the priority. What does stabilization mean? It means you stop trying to chase the same feeling. It means you stop trying to prove you can do it again immediately. It means you stop trying to scale instantly. It means you respect that your mind is vulnerable after success, the same way it's vulnerable after loss. Most traders only treat losses as dangerous. They think success is safe. It's not. Success is dangerous because it makes you overconfident, and overconfidence creates rule breaking. So you must treat success like a high-risk moment. That is the first maturity level. After 20,000, you must switch from winning mindset to protecting mindset. Protecting doesn't mean fear. Protecting means professionalism. Protecting means acting like a risk manager. Protecting means you now have something worth preserving. Before 20,000, you were building. After 20,000, you are maintaining and compounding. Those are two different skill sets. Building requires hunger, energy, drive. Maintaining requires patience, restraint, stability. A lot of traders can build, they can grind, they can chase, they can work hard, they cannot maintain. Maintenance is boring. Maintenance is emotional maturity. Maintenance is what creates wealth. So after 20,000, your goal is not another 20,000. Your goal is to make sure the first 20,000 becomes the new floor, not the new peak. That's the mindset. Now let's talk about the 3 biggest rules that keep traders from giving it back, because these are the rules that protect your state. The first rule is contraction. After a big win, you do not expand, you contract. You narrow setups, not widen. You reduce frequency, not increase. You stay in your most proven zone. You cut anything experimental. You cut anything extra. You become more strict. This is why the trader who keeps money often looks like they trade less after a big win. People think it's because they became lazy. It's not. It's because they became smart. They understand that their emotions are more fragile after a big win, so they remove opportunity for emotional behavior. The second rule is normalization. You do not emotionally celebrate the win like it made you a new person. You don't make it mean too much. You don't start talking different. You don't start acting different. You don't start planning your whole life around it immediately. You normalize it. You treat it as the outcome of your system. You treat it like something that can happen again and also something that doesn't need to be forced. Normalization protects you from ego inflation. It protects you from performance addiction. It keeps your identity stable. The third rule is withdrawal or separation. This is one of the most powerful things you can do psychologically. When you make a big win, you remove some of it from the battlefield. This doesn't mean you withdraw everything. It means you separate a portion, so your mind knows it is real and protected. This reduces the fear of losing it, and it reduces the greed to multiply it instantly. When the money stays fully in the account, it can feel like casino chips. It can feel like points. It can feel unreal. That unreality makes you reckless. Separating a portion makes it real. Reality creates respect. Respect creates discipline. I want you to imagine yourself in the moment. You hit 20,000. You're excited. You're thinking big. You're thinking you can do it again. This is the moment where most traders mess up. Most traders go right back the next day, trying to repeat. But the disciplined trader does something different. The disciplined trader stops. They step back. They breathe. They journal the win and the behavior. They analyze what caused it. They identify what conditions were present. They acknowledge that their emotional state is different now. They protect the mindset. They build a plan for the next week that prioritizes stability over aggression. That's how you keep it. Now let's talk about the biggest trap after 20,000, which is scaling too early. People think scaling is about size. It's not. Scaling is about consistency. Scaling is about the ability to repeat clean execution. If you cannot repeat clean execution, bigger size just magnifies your flaws. If you scale too early, you don't just lose money, you destroy confidence. Because now you're losing bigger. Now your nervous system gets traumatized again. Now fear returns. Now you hesitate. Now you self-sabotage. Now you become unstable. So the rule is simple. You don't scale because you had one big win. You scale because you demonstrated stable execution over time. One big win is not proof of stability. It's proof of potential. Stability is proof of mastery, so you protect the win and earn the scale. That's how pros think. There's a trader named Dante. Dante makes 20,000. Dante gets excited. Dante increases size. Dante trades more. Dante feels like he has to capitalize. Dante enters expansion mode. Dante starts taking trades outside his best setups. Dante overtrades. Dante gives it back. Then there's a trader named Eli. Eli makes 20,000. Eli stays calm. Eli contracts. Eli tightens rules. Eli reduces frequency. Eli keeps the same position sizing. Eli focuses on execution. Eli treats the win as a test, not as a trophy. Eli compounds. Eli keeps it. Eli builds on it slowly. Eli becomes a career trader. The difference between Dante and Eli is not intelligence. It's maturity. And maturity in trading is not about age. Maturity in trading is about the ability to control yourself when emotions are high. If you want to truly level up as a trader, you must become the person who can handle success. You cannot just train yourself to handle losses. You must train yourself to handle wins. To handle big green days, to handle praise, to handle confidence. Because confidence is dangerous when it becomes entitlement. Confidence is dangerous when it becomes ego, when it becomes addiction. So you must train calm success. Calm success is when you win and still respect risk. When you win and still follow rules. When you win and still stop at the right time. When you win and still feel grounded. That calm is what creates longevity. Now let's end with the final principle that ties everything together. The reason everything changes after 20,000 is because you are confronted with a choice. You are confronted with the choice to become a professional or remain an emotional trader. 20,000 is not just money, it's a mirror. It shows you whether you are trading for mastery or trading for dopamine, whether you are disciplined or just lucky, whether your process is real or your emotions are in charge. So if you ever hit that number, remember this. The moment you win big, your job is not to win bigger. Your job is to protect the mindset that made winning possible. If this video gave you value, like the video because this is the difference between a moment and a career. Subscribe because Traders Mind TV is here to build disciplined, wealthy traders, not screenshot addicts. Share this with someone who keeps giving back their wins because this truth can save them years. And if you want to lock this lesson into your identity, comment, "I keep what I earn," because that statement matters. The market can give you money, but only discipline can help you keep it. Making it is skill. Keeping it is mastery, and mastery is what makes you unstoppable.